You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. The Option Block is brought to you by Tasty Trade. You take the unbeaten path. You root for the away team. You wear shorts in winter. You don't put ketchup on a hot dog. So why wouldn't you trade with a broker that lets you go your own way? Tasty Trade. Stocks, options, futures, and more. You choose. You trade. Chart moves with hundreds of custom indicators. Stare at the candles till you see them in your sleep. See it, click it, trade it on mobile, web, or desktop. Supported by a trade desk that knows how traders think. The data, the tools, the knowledge. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back from an extended holiday hiatus. Hope everyone had a great holiday. If you're here in the U.S., if you're international, hope you had just a great break, a great second half of your week. Of course, no show for the OB on Thursday, but we're back again, rearing to go here on a Monday to kick off our broadcast week. My name, of course, Mark Longo from the TAG, OptionsInsider.com, as well as from the network upon which so many of you are mainlining and binging these days. I have a lot to get to on the show today, including a great guest to help us do that. But before we get there, let me welcome on my compatriots here on the show. First, let's go out to the dark and stormy hinterlands of Chicago. I'm just kidding. They're never dark and stormy. Always pleasant. We are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, as well as dialing the needle all the way down to the Southern Volatility Mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. I welcome them both on now, listeners, because we had to take a break a few weeks ago from the old 80s wrestling trivia, but it is back. It is back this week in high style. And of course, you may have seen some of the fun over the weekend. I did, just solely for research purposes, listeners, for this very segment, I did attend none other than the Survivor Series this weekend over here in the Allstate Arena. You may have seen it. Seismic events going on, blowing the doors off the world of sports entertainment. Crazy show, people flying off tops of cages, explosive fireworks, explosive events. I saw grown men weeping and hugging strangers with joy. They were so happy at the events that were unfolding around them. It was a scene. It was something, listen. Even if you're not a wrestling fan, it definitely took over the social media verse for this weekend. So it got me thinking about the theme for this week's 80s wrestling trivia segment. Without further ado, here we go. weekend, the things I do for this network and for this show, listeners, I make myself go all the way out to the show just for research purposes. Nice guy that I am. Wasn't anything to do with taking my son out to the show or anything along those lines. But a fun time was had by all. It got me thinking about the origin of this event, aka Survivor Series, which kicked off back in the halcyon days of the 80s, 1987, Thanksgiving of 1987 in particular. Remember, that was the year we were coming hot off the heels of that point of the early days of that Hogan and Andre feud. WrestleMania 3 was that year. Kind of really kicked off the modern wrestling era. In fact, if you watch anything wrestling related today in WWE land, the first thing they show is that body slam of Hogan and Andre. So it's a seminal event. Coming off that, they want to build on that. They go into Survivor Series where they have two teams, one captained by Hulk Hogan, one captained by Andre the Giant. Other people were in it, Bam Bam Bigelow. A bunch of people were in those teams. I now put it out to Uncle Mike and the greasiest of meatballs, Mr. Mark Sebastian. Who was the winner of the inaugural Survivor Series? Who was, dare I say it, the lone survivor? Uncle Mike buzzing in already. I knew it. All right, Uncle Mike, sir.
Hulk Hogan.
Oh, wow. No, incorrect, sir.
Oh,
Uncle Hulk Hogan.
Okay.
You would think Hulk Hogan would be the sole survivor, but the answer was no. I turn it now to the greasiest of meatballs. Can you steal, sir? Do you have a buzz in?
Yeah, no, I've got a buzz. Who are the teams again?
The team captains were Andre the Giant and Hulk Hogan, and then there's a bunch of other people on the teams. One of them could have been the winner. You don't know. I'm not going to say. So who was the sole survivor?
The sole survivor, I'm debating. I want to say it was either Andre the Giant or the $1 Million Man.
Got to pick one. No
I know
twofers.
there was some cheating involved, and Andre turned heel.
Of course, there's always cheating.
Pushed his heel. What's that, Mark?
There's always cheating involved. You got to pick one, though.
Yeah. So I'll say Andre. I'm just going to go with Andre the Giant.
Of course it was Andre. They wanted to go back from that thing. Yes, Andre the Giant was indeed the sole survivor, the winner of the first ever Survivor Series. Would go on to have a kickstart that feud with Hogan. All sorts of fun. Leading to the event that popped off this weekend here in the Allstate Arena with all sorts of great fun and all sorts of great fanfare. Speaking of great fun and great fanfare, it is time to commence operations here, listeners, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. 80s wrestling fun aside. I know a lot of you missed it over the last couple of weeks, so I hope you're happy that it is back. We are now diving into the trading block, of course, the portion of the show where we break down what the heck is trading, what is lighting up our tapes out there. Before we do that, let me welcome now our guest, our co-host, holding down the Tasty Trade hot seat, old friend of the network, even though he hasn't been on in a while, and not in his new capacity as the CEO over there at IG Group North America, our old buddy, Mr. JJ Kinahan. JJ, welcome to the option block, sir. It has been forever in this case and been too long since you've been on the network.
Yes, it has. Great to be with you, Mark. I was actually going to guess Randy Savage had it come down.
Oh, I could have tossed it to you then. I didn't want to put you in the crosshairs.
Name. But anyway, hey, great to be on with you guys. It has been too long, and looking forward to a really fun segment.
JJ, obviously you've been on in the past, most recently in your capacity over there at TD. Obviously a lot going on over there. And obviously for this show, we have new listeners all the time who may not have heard your recent appearances. So give our newer listeners a quick overview of your background in the world of options, as well as what it is you do day to day over there at IG Group.
Sure, Mark. So I've traded on the floor of the SEBO for 21 years as primarily an independent market maker, trading mostly S&P 100 and S&P 500, so OEX, SPX. And then started at Thinkorswim. We were sold to TD Ameritrade, and I stayed on at TD Ameritrade as a managing director in a number of roles, including chief market strategist. I ran the Thinkorswim platforms for a number of years and held, but as I say, just about every role you could hold in the trading group there. And then the same guys who had started Thinkorswim, Tom Sosnoff, Scott Sheridan, had started Tasty Trade, sold it to IG Group, and ran into the guys, about a year and a half ago, and they asked me to come over, and, they needed a CEO over here. And so it was great to come over and, get the gang back together, if you will, same group that sort of started and ran with Thinkorswim.
You're bearing your greatest accomplishment, sir. You did that commercial with Lionel Richie.
I did do I did have fun. I got to do 3 commercials while at TD Ameritrade, and it was really, really fun. And Lionel Richie, by the way, for those of you, hopefully it confirms what a lot of you thought, truly a gentleman, one of the really nice people I've ever met, and his talent is crazy. The trivia question about him is that he was a prodigy tennis player also.
Really? Oh, I guess that makes sense.
You look at his build, I mean, he's about 6'4", 6'3", tall, thin, pretty quick. It kind of makes sense.
Oh, interesting. See, you learned something you never knew, listeners, listening to the show here. Now you have one more step in your 6 degrees of separation to Lionel Richie. Just throw JJ in there, and you're good to go here. As we're good to go here for the start of the trading block, listeners. And good thing we talked for a little bit here at the start of the show, because we managed to talk the markets, most of the major indices, into a wee bit of green. The S&P just ticking green as we started the show here, listeners. Right around 45.60 as we're kicking off here. The Nasdaq up about 1/3%. The Dow still the laggard, down about 0.2%. We'll see if that changes tune as the show progresses here. Of course, coming into the start of this week, we're not really getting a lot of vol back or a lot of weekend back in VIX. VIX was at about 12.75 when we kicked off the show. That puts it down nearly a full point, about 0.9 of a point. Again, we're going all the way back to Monday's show. There was no Thursday show last week, listeners. So a 12 handle, you know, my thoughts on a 12 handle, I start to get a little bit nervous. The hair in the back of my neck starts to stick up. I start to think of the dark days of 2017 where vol went to die and volume went to die, and all sorts of fun happens when you start seeing 12 handles on VIX. But I'm not going to go there yet. Not going to get too dire yet, listeners. VVIX at about an 85, actually ticking up about 4 points from where it was this time last week. VXX at about a 17.5, down about 0.75 of a point. A UVXY a little bit north of a 10 handle, about 10.1, down nearly a full point, about 0.9. So UVXY are going to have to do that reverse split dance pretty soon. I guess they like reverse splitting these products every couple of months. SVIX 34.15, up about 1 1/3 points, and UVIX 17.80, down nearly 2 points, about 1.8 points. I had some fun with no shows last week. Listen, I had some fun legging into and out of UVIX flies. The things I can do when I don't have shows going on. Go figure out there. So that was kind of fun. I'll regale all of those stories, I think, on Options Oddities coming up later this week. You guys can check all that out, of course. You know where to go, theoptionsinsider.com/pro for all that fun. But JJ, a lot going on. An interesting couple of weeks, an interesting start to our post-holiday week. What's been catching your eye in the markets? Of course, we've seen just naught but rally ever since Powell and company took their foot off the brake a little bit there. This market has done nothing but rally. So if you have some thoughts on that. And then, of course, coming into this week, kind of a bit of a whimper, a quiet start to the week. Anything catching your eye out there today, sir?
Yeah, so I think you covered the primary thing, and that has been the VIX. As you said, that's just been really almost frightening in terms of how low it's been. You know, it's interesting. This continues to be the rally that nobody loves, if you will. You know, we have 4 weeks in a row that we're up at least 1% for the week. We're up 10% overall in that time frame. So maybe that explains a little bit of the low volatility. But given, you know, that we have two potential one military situation going on, another one on a ceasefire, that seems as if it could be a powder keg at any time. The bond market, I think, has been something that's really, you know, continuing to signal to us that maybe the market has confidence that the Fed is done raising rates. I don't think I'd go as far as saying that we're going to be cutting rates, but, you know, you have this 10-year down to just 4.4. It's really been crazy. And I think the other good news for the consumer has been crude oil continuing to go down. And, you know, we all saw these amazing numbers from Friday. Record-setting Black Friday, although it was still slightly below expectations. And today, Cyber Monday, also is scheduled to be a record setter. With that, Mark, I will tell you one of the more interesting things from our Tasty Trade side last week. Walmart, the last 3 days, has been our number one traded most bullish name.
Really?
And what's really interesting, Mark, is, as you know, retail tends to be a little bit bullish. You know, it's probably 52-48 bullish to bearish. in terms of their most names. 75% of the trades that we saw in Walmart over the last 3 days were actually bullish trades. So going into it, people had high expectations, which I think, since these are true retail consumers, tells you something what people were thinking about Black Friday, Cyber Monday. And now, they put their money where their mouth was.
You don't hear Walmart dominating the upside tape. Usually it's whatever, meme stock or whatever else is hot that day. But Walmart, everything old is new again. JJ. So you want to, it's so funny you say that, Mark. Let me just give you the 5 names that were the most popularly traded names last week. And I feel like I'm talking, and it's 2000. Walmart, GM, ExxonMobil, Home Depot, and John Deere. How crazy is it that those are the 5 names? We titled the show recently, just in the last week, Party Like It's 1999, because you're right. All the top most actives, all the movers and shakers in the market, Microsoft, GM, all the names you just said. Intel was back on the list for a while there. All these names that we really haven't talked about to a great active trading degree, certainly, for quite some time. Yet you're right. They're all back on the radar.
Yeah, we're just missing Prince.
Yeah, that's all we're missing out there. And you mentioned, the VIX. I was obviously only half joking at the top of the show. Is when I do get, I won't say nervous, but like the hairs on the back of my neck start to stick up when we start flirting with the 12 handle in VIX. I think I have a little bit of PTSD from that 2017 year where we all joked on the network. Of course, it was the first year of the new Trump administration. Everyone, to a person, every single guest on our network, whatever their thoughts were on the new administration, they all agreed on one thing. They all said Trump is not a single-digit VIX president. Yet, of course, that was exactly where we went for the lion's share of the year. VIX just languished in the single digits, and it started when we hit 12, obviously, and started moving inexorably to the dark side and didn't really recover for some time. That obviously hit volume. That hit a lot of things in the world of options. Obviously, the options market a very different place now than it was in 2017. A ton of new traders coming to platforms like Tasty, a ton of new entrants to the market listening to shows like this. So it's been fantastic across the board. But I'm curious for you, you're a brokerage guy, so you live and die on volume. Are you like me when you see a 12 handle start popping up in VIX land? Do you start to get a little nervous?
Well, as somebody who's running a brokerage firm, yes, that makes me nervous. And B, just as somebody who's still an active trader, I think you're probably like I am too, in that you're like, okay, what calendar spreads can I start buying, or ratio spreads to take advantage of a little bit of a volatility pop if we have one here. But unfortunately, as we also both know, that can last a lot longer than your time frames on your trade. So I think the biggest thing when it gets like this is you really have to have some patience and watch, for those listeners, you really have to have some patience in your sizing as well as your timing when things get like this.
Yes, words to live by and indeed to trade by out there. As we keep on rolling and go around the horn, let's go out now to our winner of our 80s Wrestling Trivia segment, Mr. Meatball, sir. First off, Mr. Mark, if you have any enduring memories, it doesn't have to be the first one, on any of the Survivor Series. If you heard the crazy news about this weekend, by all means, have at it. And then B, what's catching your eye out there? And looks like we're starting to swing towards the upside kind of market, sir.
All right. So my first question to you, Mark, was there any actual Survivor Series at the Survivor Series this year?
That's the funny thing. No, it's all war games now, away. Which I do like a good war games. It's one of the reasons I went. Those are amazing match types. I also went because my son, a big fan of the person who made his infamous return, and let's just say a lot of
CM Punk returning.
A lot of happy faces. Yes, I've never, short of maybe the Bears winning the Super Bowl, I don't think I've seen grown men from Chicago just weep openly and embrace random strangers and scream out. I've never seen anything like it. It was insane to be in that building. Let me just put it that way. Yeah, it was nuts. To say they quite literally almost blew the roof off that place is underselling it. It was crazy. But I digress, sir. Have at it. What's catching your eye out there these days, sir?
Yeah, they tried to kind of open things lower. We've been meandering higher. We got another day of tech up, consumer discretionary up, and kind of everything down. Energy is taking it on the chin today a little bit. And then you've got some strength in gold because the dollar is weakening. Rates, bonds, we're not going to go back to 0% rates, but I think what the market really needs is just bonds to not continue to explode higher, so that the market can kind of get comfortable around, what we're, where rates are. And now that we don't see rates going up a lot more, that's allowed the market to continue to rally. And, coming off the long weekend, VIX is up 0.3%. That's down. The December future, which, I know we don't get too deep, super cheap. This thing has more than 3 weeks to go. It's got a full month, and they're pricing it like it can't. Like VIX is never going to break 14, because even the December future is below 14 now. Where am I seeing strength? It's in the chips, it's in tech. NVIDIA has rallied off its disappointing earnings. AMD looking strong. Intel making a run. Is it going to $50? Maybe. So, it's a mixed bag, kind of across the board, with kind of old line industries, energy, financials, industrials down, and tech leading us higher.
Sounds like a movie we've seen once or twice out there in the past, as we turn our attention now to the hinterlands of Chicago. Mr. Uncle Mike, sir, A, if you have any enduring memories of a Survivor series that particularly resonates for you, and then B, what's catching your eye out there? And it seems like we're turning towards, the S&P just tipped red, so maybe not, but the NASDAQ is still in Uncle Mike green territory, sir. What's catching your eye?
Well, there you go. I mean, let's see what we can do to talk this market up in the next 40 minutes or whatever we have left. We'll see what we can do. But, yeah, I mean, with tech leading, it's difficult for us to have rallies without tech leading the way. There's no doubt about that. We are getting some buyers in the bond world again today. Nothing too crazy or too outlandish, but we are definitely think that with where we are at with rates right now, we're actually in a somewhat, we're not really low, but we're not really high, at least from our lifetime in these markets, so to speak. And that it's not like it was back when we were getting 0% interest, or 0.05 Fed rates or whatever. But we're also not at a spot to where we were in the early 80s, to where we had skyrocketing inflation and we had super high interest rates. So this is almost, to me, on the grand scale of things, at a level to where it almost seems normal based upon where we are overall with the rates. I remember in 1990, when I opened up my first ever savings account, with my lawn mowing money that I made, I remember getting 5.5% interest in my savings account. And of course, now at brick and mortar savings accounts, you're not going to find that, but you could online or something close to that, at least with the 1 month treasuries, they're at 5.5%. But my point is back then we had a more normalized economy, and seem to be getting back to that. At least in my neck of the woods, times are still good. People are still going out to restaurants. People are still buying stuff. And the question that I have is that we always have asked, well, when are people going to run out of money? But now the question that I will have is, when are people going to run out of debt? Because consumer debt is fairly high right now. And at what point are people going to cry uncle and say, I can't pay this anymore? Because if you don't have the money to buy something, eventually you got to buy it, or you got to pay for it eventually. And the problems of high interest rate credit cards, they're not going to get better with interest rates higher. So just have that understanding. So I guess with that being said, when's the money going to stop? Who knows? But when it does, it'll be interesting to see how the Fed wants to bail us out that time. But for right now, times are good. Christmas is coming, and everything is awesome.
Everything is awesome indeed. Let's see if these markets are awesome, at least from a overall volume perspective. Are we lighting things up to kick off our first week back from the holiday, listeners? The answer is not really. Everything really kind of across the board looks like we might be hanging out in, let's say, the dog days of summer, or perhaps getting into the more seasonally appropriate holiday period of late December. Right now, VIX struggling to catch a bid from a volume perspective. A little bit north of 250,000 contracts, about 277,000 contracts on the tape. That ADV, of course, coming back below 750,000 as well, down to 728,000. Again, it's the holiday season. Things might pick up again, but we shall see. SPY, 3.5 million right now. The ADV, 8 million. So SPY, that's really light for SPY right now, listeners, because usually you expect it to be somewhere around 4.3 to 4.5 million, if not more. And so 3.5, that's pretty light for SPY. The S, 1.5 million. Again, that used to be banger volume not too long ago, a little over a year ago. Right now, 1.5 million. We kind of expect more from the S now as well with this whole 0-day palooza coming to grips with all of us. The ADV, 3.25 million out there. Small caps, they've been fascinating to watch of late. You know, what are they up to? Kind of moving to the beat of their own drummer. Small caps, at least the IWM flavor, off about 0.33% today and putting up nearly 500,000 contracts, about 480,000 contracts. That may sound like a lot, but then you hear the ADV is 1.7 million, so it's kind of light. 1.7 is a heck of a lot of volume. Can they sustain that? We shall see. Right now, not looking like that's the case. The Qs, almost 2 million on the tape, so the Qs looking decent, about 1.93 million. The ADV is a little bit shy of 4, about 3.7 million. So the Qs seem like they're on pace for a typical day's worth of paper. Is it a typical day out there in the single names? I guess the answer is it depends what day you're thinking of. If you're thinking about the dog days of summer or the late days of December, then the answer is yes, it is a typical day. Only cost you 164,000 contracts to break into the top 10 today. And even though we were just joking about everything old is new again, we've got some shall we say, seasonally appropriate names breaking up into our top 10 today, including number 10, Shopify. You know it's Black Friday, Cyber Monday weekend, listeners, when Shopify's make it into our top 10. Of course, ticker symbol SHOP. 73.86, up about $3.50 or nearly 5%, popping on the heels of a pretty strong, obviously, Black Friday, Cyber Monday weekend. Shopify, number 10, 164,000 contracts. Number 9, Coinbase. A lot going on in the world of crypto. Good thing we have a whole show all about that called the Crypto Rundown coming up not long after this show. So if you're on the pro side, you're hanging out, listening live, hang out. We'll be back in a little bit with some special guests to break down the world of crypto. A lot of action out there. Coinbase popping pretty hard today, trading 120 pretty much even, up about $4.50 or nearly 4%. Of course, you've seen all the action out there on the crypto front of late. So no surprise that Coinbase is moving, coming in at number 9 today. 183,000 contracts. Number 8, this is another one for a lot of you. Maybe it's a cheaper dip into the AI pool. It is Palantir, 19.25, kind of unched today. They've had an intriguing month, an intriguing couple of weeks. They got up to 21.5 just last week, and now they're back to 19.25. This thing, of course, was $7.50 earlier this year. It actually got down to below 6. So this thing's had quite the run, and good today for number 8, 194,000 contracts. Number 7, going back to everything old is new again. It's good old Softy, trading 380 even right now, up 260. Of course, all that drama with them and AI. We won't get into all that here. We could fill several shows with that. Silicon Valley drama, not my favorite thing to break down here on the show here. Microsoft, number 7 here, 209,000 contracts. Number 6, the chip zone coming early today. It's AMD, 123 and about a quarter, up nearly a full buck or about 0.75%. Good for 222,000 contracts. Number 5, again, speaking to the season we are in right now, which is shopping season. Affirm Holdings, you know them. They do a lot of these kind of payment plans for a lot of the things you buy online, listeners. 28.70, up $2.50 or nearly 10%. Of course, popping hard off the news that it was a pretty strong Black Friday weekend as well. Haven't seen them in our top 10, I don't think, ever. So number 5, 228,000 contracts. Kind of interesting out there. Are you out there slinging Affirm? I'm guessing probably no, but hit us up if you are. I'm curious. Number 4, yes, I said number 4. It is the fruit company, listeners. Apple hanging out 190 and about a third, up about a third of a point today. So a nice little pop here for Apple. Again, 415,000, so a very light day for Apple, but that's the kind of day we're having out there today, listeners. Not exactly a banger day to kick off the week. Number 3, keeping it in A, tech names, it's the Amazonians, 148.94, up about 220 or 1.5% today. Good for 526,000 contracts. And the number 3 overall spot. Number 2, you can probably guess at this point what are number 2 and number 1. If not, you haven't been listening to the show. Number 2 is NVIDIA, 483.5. Actually just ticked 484 right now, so moving pretty good. Up about 6.25, about 1.3%. Good for number 2, 586,000. And you know what the number 1 is, listeners. It's Tesla. Good for exactly 1 million contracts, 1.00 million contracts on the tape for Tesla. Tesla 237, pretty much even, up about $1.50. So bit of a quiet day for Tesla. Looks like the low came around 232, so only about a $5 range, which for Tesla is not much, and about 1 million contracts, which also, if you know Tesla, is not much, listeners. In terms of earnings season, luckily for you folks, because we like you, we got all the new numbers hot off the presses from our friends over there at ORAT. You can find them for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab to check out all that data we give you folks, because we like you. Completely for free. Just click on that Options News and Articles tab. Got some decent names popping off this week, including Intuit coming up tomorrow after the bell, Petco and Hormel on Wednesday before the bell, as well as Victoria's Secret after the bell, and Snowflake. Everyone was talking about Snowflake not too long ago. Are they still the hot name? We'll find out Wednesday after the bell. Thursday, TD. JJ may know a thing or two about that. Dell after the bell on Thursday as well. Cracker Barrel on Thursday. Still some big names popping off here this week, listeners. So you, of course, you folks can check out their reports. Let's look at a couple of them really quickly to see if we have any. We have Salesforce coming up. They're coming up this week as well. They're on the 29th after the bell. 224 and about a third is where they were trading when we ran this report this morning. They were pricing in $11.50. I remember we've been saying, listeners, the narrative this cycle has been more juice, more juice, more juice. Well, Salesforce is bucking that trend. In the past, they've moved 14.25. So that's a substantial amount off the top. They've only pricing in $11.50. So, wow, that is a substantial decrease in terms of earnings previews, earnings juice. Snowflake, 29th after the bell, 171.16. They were pricing their straddle at 14.75. In the past, they've moved about $18.50. So, wow, this is surprising. Usually, we've seen a lot of names pricing in much more juice, and it has worked out. This season is actually looking pretty robust as a result. But these last couple of names, wow, cutting a lot off the top. Let's see if we see any others doing that. Dell, same thing. Dell, 30th after the bell. They're trading about $74.40 when we ran this report. They're pricing in about $4.60. In the past, they moved about $5. So 40 cents off the top for Dell. So interesting. Maybe some of these later names are starting to go, oh, you know what? Not so fast. ULTA, the beauty shops there, listeners. 414.75. They were pricing in their straddle $26.60. In the past, they've moved $18.45. So yeah, ULTA pricing in a wee bit more juice out there. Glad to see somebody is, because our season right now, listeners, is still hanging out at 113% with 772 names reporting. So that's a fair amount of extra juice we've seen exhibited in the marketplace. It's interesting to see some of these names this week taking a little bit off the top. Our long-term average, of course, is exactly par, exactly 100%. But enough of that fun, listeners. It's time to get to some of the unusual activity fun. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we get weird, we get wild, we unleash the eye of Sauron to see what it fixes its fiery gaze on in terms of unusual activity. And JJ, I don't want to put you on the spot, but I know sometimes some of our guests come armed with some interesting trades or activity that they've noted that has caught their eye. You kind of just mentioned last week Walmart being a surprising bullish name over there at Tasty. Any other interesting trades or activity come across your radar you want to share here with our listeners at the top of the segment, sir?
Sure. I'll share two that are actually seeing a lot of bearish activity. And again, old school. But what's interesting to me about these two names is they both significantly underperformed the broader market this year, and particularly this latest rally, and that being AT&T and Bank America. Both of those trading about 60% of their activity on the bullish side. So I'm sorry, on the bearish side. I apologize. I said that backwards. On the bearish side. So again, just kind of interesting that people are still bearish on stocks that have underperformed. I think that's, often, in our career, Mark, you and I have seen the opposite of people when we see rallies like this saying, okay, where can I go to kind of buy that stock that I think is going to really pop? And so what it tells me, quite honestly, is people still aren't fully bought in that this rally can continue overall when you are selling those that have underperformed.
Yeah, you're right. That kind of gets back to what you were saying at the top of the show, JJ, that this is probably the most hated rally I can certainly remember in quite some time, and you kind of alluded to that as well. People do seem like they're waiting for the rug to be pulled out from under them at any moment. So maybe some of this activity right now, Bank of America listeners trading right around 29 double off about 17 cents, and AT&T 16.20 kind of unched out there today. And you're right, two also I think definitely qualify as old school names. I remember when I first walked on the floor of the SEBO, people couldn't even be bothered to say AT&T. They had to say telephone or phone.
Telephone.
I never thought, I was like, that's not really an abbreviation. You're making it longer. I never understood that. But that's a conversation for another day. I'm going to go trade some telephone. You could just call it AT&T. You save yourself some syllables. But I digress. Let's get into some of the other paper. Have you noticed that, listeners? Have you been trading some more of these, shall we say, old school that are new names again, like Bank of America or AT&T? We know you're slinging Microsoft. But outside of those, some other? We talked about Intel recently, back on the show for the first time in years. Some of these late 90s, early 2000s names starting to make themselves felt again, which is kind of intriguing. Speaking of people making themselves felt again, Mr. Mark, you probably are familiar with this one. I know your compatriot, the Rock Lobster, is, because he and I have traded it on our Options Oddities show. This is Vodafone, trading about $9 even today, off about a dime out there. If you've been listening to some of our pro content, you know the saga that is Vodafone. A year ago, listeners were trading $11.10, and then it rallied up to its high for the year of about $12.50. That came a couple of weeks into February. Again, that's another narrative. Everyone's talking about the Magnificent Seven, how they carried this market on their backs, and that is true. But if you take away those names, a lot of the names you talk about here on the show, including Vodafone, had their peak, had their apex much earlier in the year, around the first or second week of February for a lot of them. And Vodafone, no exception. $12.50 is where it hit then. It hung out there for a little bit, and then it fell off a cliff. By June, it was trading $9 even. That was pretty much right around the low for the year. In fact, it looks like it actually briefly broke it just last week, got down to $8.84. So right around where we are right now is pretty close to its 52-week low. I bring this up because we have noticed a couple of times on our Options Oddity show, listeners, size call paper coming in Vodafone and being particularly well-timed. The first time we noticed was probably about a year and a half ago when they were buying the 17s in April, 40,000 times, and those worked out pretty well. They came back in this year and bought a large number of I think they were the 14s and then the 11s. Those didn't work out too well because the stock ended up falling out of bed. But it looks like they're back again for another tilt at the windmill, listeners. In particular, it's the April 10s this time that has caught their eye. So $1 exactly out of the money calls. They scooped up 10,101 for 38 cents. And then the stock was 903, so right here, the stock hasn't budged. There are obviously... Wait, are there no earnings between now and April? That doesn't seem right. It says the next announcement is May 14th. That seems pretty late. I'll have to go back and check this, but right now it says there are no earnings. I'm not sure if I agree with that, but either way, they like this trade so much they came back and did it again, and then did it again, and then did it again. A total of, as we kicked off the show, they may have even done more by now, 52,000 had gone up on the day. Mr. Meatball, I know you saw this one. A blind monkey could have seen this trade going up today. So what are your thoughts on our old friend, the size call buyer, coming back in Vodafone once again to the upside, sir? What do you think?
Yeah, I did see these. It came in pieces, but it was hard to miss. It was a lot of calls being bought with the trader thinking this thing is going higher, trying to pick a bottom. Obviously, the stock has somewhat bottom, definitely looks bottomy here. It's definitely had a rough go. And, they got a dividend coming up. Most of telecom has done pretty well outside of VOD. So it's an interesting one.
Yeah, it's definitely of heightened interest to us because this is one we have tracked for a while. And in previous incarnations, if this is the same customer, it's about the same size. It's also, I should note, about the same premium level that they paid in the past, paying about 40 cents for these calls in the past. Let me look really quickly if I can find. Yes, they bought the October 11s for 40 cents many, many tens of thousands of times. They started doing that back in May of this year. So again, they bought the OC 11s. Those didn't work out when the stock fell out. They kind of bought some 10s as well. Both of those trades did not work out, but looks like this time maybe they're back. Similar size, similar premium levels. So does seem like it is the same customer or someone who at least is inspired by that. JJ, I'm curious, is Vodafone, that's another kind of old school name that's getting hot again. Is this one on your radar at all over there at Tasty Trade these days?
Well, so two things. First of all, the earnings date is correct, Mark. Don't forget they are European-based, so a lot of the European firms only do earnings twice a year.
Yeah, that's true.
So
okay.
they just make sure on that. And then, for our clients overall, it has not been a name that's really on the radars to be really interesting or to be really, honest about it. Although it does have some decent volumes, if you look at, the open interest on like the December 10s and the December 9 puts. So there has been a decent amount of interest in here overall. As you guys both just said, pot odds would seem to be that the upside has certainly more potential, if you will, than the downside right now. And looking at the chart, we're just off 52-week lows. So it seems probability-wise like it's a pretty decent shot.
It seems like a shame to buy all the way out to April, not even get one earnings cycle in there. But c'est la vie. That's why it's probably only 40 cents, 38 cents to go all the way out to April for those calls. Again, we've seen this level before, listeners. Someone likes 40-cent out-of-the-money calls in Vodafone. And when they do, they like them for size. And this most recent round, they have not been winner chicken dinners for them. But in the past, we have seen them hit some pretty decent upside shots on this one. So who knows? Perhaps Vodafone is due for a resurgence. I'm going to have to look at this one again might be some fodder for options oddities. Maybe I can talk the Rock Lobster into buying them instead of me this time. Let's go out to a fun one because we're coming up against it. I want to make sure we have some time for the strategy block today as well. Let's do some fun calls in a cheap name. How about that, listeners? Not quite a biotech today, but let's go out to 3D Systems Corp, ticker symbol D. We have talked about this one before. It's all in the name. They sell 3D printers and 3D printing accessories. Trading 5.25 today, off about 14 cents or 2.6%. So not exactly a banger day for them. Also not a banger year for them. A year ago, they were trading about $9.13. So they're off nearly $4 or nearly 43% on the year. So a rough year. Another name, which once again, getting back to that theme I've hit on a few times now, take away the top names in the market. It's been a rough year for a lot of names out there. This is another name that hit its apex on February 2nd, $12.67. It has never looked back from that level, even though it has rallied over the last month. Looks like it hit its nadir around $3.50 right around Halloween. So in the last month, it's managed to rally about 47% or 1.7%. So very much a glass half full, glass half empty kind of name, depending on where you're looking. We're obviously looking at today's call activity, listeners. In particular, we saw somebody come in this morning, again, kind of like we saw with Vodafone, going a little bit longer term, a little bit out of the money, this time going to May, not to April, a little bit longer, and going to the 7th this time. The May 7 calls, they scooped up about 2,300, lifted the offer for 50 cents. That's a 70 vol if you are intrigued, listeners. So no small amount of juice they were shelling out for these. The stock was right around here, 517, so it hasn't really moved. Unlike Vodafone, they do have earnings between now and May. Their earnings are on February 27th, so you do get at least one announcement for your 50 cents. Still, that's a heck of a lot of juice. You'd close it in on 10% of the value of the stock. Maybe, JJ, we'll start with you just for fun. First off, this is a thing we've debated on the show for quite a while now. You've been in the options game for a long time. I'm sure you have some thoughts. Where do you stand just in general on the paying nearly 10% of the value of the stock for some options? Are you a fan? Are you not a fan? And then B, if you have any thoughts on these 3D systems, have at it, sir.
Well, so, to your point, Mark, that is really a lot of primo to pay. And so you got to hope for what's an implied move in this. And so, again, the implied move's a little bit more than that, but you have to be not only right directionally, this premium has to hold up. So I don't necessarily love that. You're playing clearly, I think, for a bit of a home run. Would you pay that much? Now, in real dollars, is this a lot of money? No, it's not, because the stock is so cheap. So from that point of view, it's not as bad. So again, I personally wouldn't love this trade, because unless you're saying, okay, I am laying it on the line, this is the whatever 5 or 7 or 10% of my portfolio that I'm going to use for pure speculation, because in my opinion, paying that much is a pure speculative trade. I never say a trade is a bad trade to do, but realize what you're doing with it. And all of us like to speculate in some things as a small percentage of our overall portfolio. And if that's what this is, God bless it.
All right, Mr. Meatball, same question for you. It's the age-old question. Would you rather have about 2,300 of these calls, or about 22,000 shares of the stock for the same amount of money you're paying here? And then B, in particular, what are your thoughts on paying 50 cents for some May 7s in triple D, sir?
Well, if the stock's going to make a big, huge move, then you're going to be happy about the calls because you get the leveraging. But, to your point, I mean, you could spend a little bit less or buy a few fewer and buy the 6 calls. I mean, you really need a big move here. I think I'd probably rather buy the stock than buy the calls. I got to be honest. But, this is if it does get a quick move, the calls are going to outperform the stock.
There you go, listeners. Yet another name to add to our endless debate, cheap stocks or options at the end of the day. I think at the end of the day, a lot of you came down on the you don't touch options on stocks below $10, which seemed kind of rich to me. I thought maybe $5 would be the cutoff. But again, you folks out there are the ultimate arbiters at the end of the day. But it is Monday, listeners. It's time to keep on rolling, dispense some options wit and or wisdom. Let's see what he has in store for us. It is time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It is Monday. It is time to unleash the beast that is Uncle Mike and dispense some options wit and or wisdom upon the masses. And Uncle Mike, I think I heard you squealing in the rafters over there at Survivor Series this weekend as well. So what do you have in store for us this week on the Strategy Block, sir?
Well, I mean, with volatility relatively lower, and I didn't say low, I said lower than it has been, I want to bring back an old friend. That old friend is the diagonal spread. We haven't talked about this in a while, and I just want to go through a basic strategy and something that you could do to take advantage of a little bit lower volatility. And so this is just designed to be something very basic. I'm literally just looking at the chains as I go, and just this is designed for being conceptual. So for my compliance people listening, this is not a recommendation, nor am I in this trade. So let's say that you like SPY over the course of the next 6 months or so. What I'm going to do in this example is I'm going to buy a 6-month. I'm actually going to go out to May 31st, 186 days till expiration. SPY is trading at 455. I'm going to buy, and this is step 1, I'm going to buy the May 31st 390 call option. And I'm going to pay $76. I'm sorry, I'm going to pay $77 for that. Now, in doing the math, if you take 390 plus 77, that comes out to 467. And by doing that, that means you have roughly $12 of time value in that option. So let's say theoretically that the S&P were to say totally stagnant between now and May 31st, then you're going to lose $12 on that trade. Now, let's say that instead of wanting that $12 to be just time value, one thing that you could do is you could sell calls against that call with which you bought. And by doing this, let's say you do this every month for the next 6 months, if you can capture $12 of premium over the course of the next 6 months, then you essentially found a way to have upside potential on the S&P 500 for roughly 20% of the underlying price without any greater risk on that. Now, of course, the other way with which you could look at if you're not looking to leverage yourself at all, let's say you were planning on buying the S&P, what you could do is, and let's assume all IRA money so the tax man doesn't have any effect on this. Another thing you could do is maybe use instead of all $455, just use $76. And of course, this is in 100 share increments, so do the multiplication whatever way you'd like. And take that remaining money and put into government treasury of some sort. And you can get some protection that way. But if you're looking to leverage yourself, one way with which you could do it, as what we're going through, is pay the $76 and you can buy that May 390 call. Now, the benefit about lower volatility that we're in right now is that you are locked in on that volatility level between now and expiration at the end of May. So in other words, if volatility goes higher, then volatility, and this is just assuming implied volatility goes higher, we're assuming that there's no movement in the market, no other factors of option trading are factored in this, but if volatility theoretically were to go higher, it would only benefit you by holding the call. Now, of course, if volatility goes higher and the market goes lower, you're not going to be benefited from it. But my point is that you're buying out longer-term volatility at a lower rate. And once again, lower, I'm not saying it's low. If you believe the VIX is going to go lower, volatility is going to go lower, then this would not apply to you. So instead of selling covered calls, you can sell calls on your call. Let's say that we wanted to go 1 month out. I'll go out to December 29th, 32 days out, and we can sell let's go fairly out of the money here. We'll sell a 464 call for $2.18. Now, if you were to do that every month over the course of the next 6 months or so, by doing that, you're going to make up the time decay that you have on this call option. So in other words, if let's say the market were to stay the same, volatility were to stay the same, and you're able to sell that call every month, you would break even at the end of May, because you would have sold enough premium to make up for the time value that you bought in the call option. Now, of course, that's not the idea of this. You're hoping that the market does go higher as you do this, and you're hoping it doesn't go too high too quickly. And that's the whole purpose behind this trade. There's a lot of other ins and outs to doing a diagonal spread. I actually haven't done one in a few years. I haven't felt comfortable with volatility levels, but this is a way with which you can do it if you are looking to take advantage of lower implied volatility and you feel it's a low enough level to where you feel comfortable buying the call. And that is the strategy block. Last one of November.
Crazy how the year is flying. Crazy how the show is flying, because it's already time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everyone, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode. We got 2 episodes for you this week, not just one. No shortened holiday week this week, listeners. So we'll be back on Thursday. Before we get there, really quickly, our question of the week this week, listeners, just went live right before show time. Getting a little bit macro, I apologize, but this has been a hotly debated question of late. So we thought we'd put it to you, the ultimate arbiters, our audience, at the end of the day. Quite simply, is it time for the Fed to revisit its 2% inflation target? Yes, you think it's too high. Yes, you think it's too low. Or no, it's Goldilocks. It's just right. JJ, we'll start with you. First off, if you have any thoughts on our question of the week regarding the Fed and that now infamous 2% target for inflation, have at it. And then B, aside from that, what are you keeping an eye on for the rest of the week, sir?
Well, I think the 2%, whether we like it or not, Chairman Powell has been pretty clear in his mandates and hasn't really, although the market's wavered a lot, he personally hasn't wavered a whole lot. So I would say that I'll say it's just right, only because I think we have to learn to accept it whether we like it or not. And the things I'm keeping my eye on this week, I think there's two of them. And you mentioned Salesforce earnings. I think that that's a really important one overall because they are so global. And so what I really want to hear out of them is what's their outlook going forward, just because so many companies rely on them for their marketing to their clients and their segmenting, et cetera. So if they talk about cutting back, it's going to give me an indication that maybe we have to look at all of technology in terms of what's going to happen on the spending there as we head into 2024. So I think the earnings call on that particular stock becomes really, really important. And that's that. And you mentioned the VIX earlier. Those are the two things that I think are the most important this week, Mark.
All right, interesting stuff. Let's keep going. Let's go around the horn. Mr. Meatball, sir, what are your thoughts on the Fed's 2% target? Is it too high, too low, or just right? And then B, what are you keeping an eye on for the rest of the week?
Well, I mean, I think it's a good target, and I think that's what they're going for. And yeah, the market keeps saying, oh, well, maybe they'll change it, and then they don't. Powell likes pouring cold water, so I don't see why they would change it. For the week, I think JJ Broad made a really good point about Salesforce earnings. Those are going to be an important one. And then from do we have non-farms on Friday, or are they the following Friday? Because the first is always dicey.
I think it's the following, Mark.
Yeah, thank you. So it's kind of a slow week economically. We'll hear sales numbers from retail, which I think will be important. And then I'm watching to see whether tech is the only thing that keeps rallying, or whether we get some more broad-based moving higher. If the whole market can get a little bit ahead of its steam, 4,600 is $43 away. That does not seem that far off. Santa Claus may come and visit us.
There you go. Last but not least, Mr. Uncle Mike, sir, what are your thoughts on the 2% target? And then B, what are you keeping an eye on for the rest of the week?
I mean, 2% is a good target. Typically for financial plans, I usually illustrate somewhere between 2 and 3 over the long haul for clients. So I think 2% is it's ambitious, but it is a good target. And I think it's kind of one of those things to where it's under promise, over deliver is what they're hoping. Or over whatever way you want to look at it. I think they'd probably be happy if we got to a consistent 3, but that's just my thought. I'm watching to see, as Mark says, if we do go over the 4,600 level on the S&P 500, and then continuing to watch rates with the 10-year in the mid-4s again. It's getting pretty interesting, seeing if we can drop down a little bit more. And the one thing that has been fairly consistent throughout this bond rally over the course of the last few weeks, the 1 to 3 month treasuries have remained in the mid-5s. So continuing to watch those and seeing if eventually those would drop as well. And that's what I'm watching.
All right, listeners, and that music means we are not watching anymore, at least for this show. But don't worry if you want more content in your lives. We'll be back in a little bit to break down all the madness in the world of crypto. And before we go, let's go around the horn. Let's start in the Tasty Trade hot seat. Mr. JJ, if folks are intrigued, they want to check out all the cool stuff over there at Tasty Trade you've been alluding to throughout the show, where should they go? What should they do?
Sure, Mark. Thank you. You can go to tastytrade.com, or you can go follow us on social media and contact us there at Tasty Trade.
And I heard a rumor you and I are going to be doing a panel together early next year, so that should be fun times, sir.
Yes, always is, Mark.
I always try to keep it lively, so look forward to that, listeners. Maybe hitting the network after that for all you listeners out there as well. TastyTrade.com. You know where to go to kick the tires and light the fires, listeners. And Mr. Uncle Mike, where should folks go if they want to talk about diagonal spreads or maybe have somebody hold their hands for some money management, sir?
You can follow me on Twitter at Mike Tosaw, TOSAW, or check out my website. Make an appointment to talk to me, stcharleswealth.com.
There you go. Check them out, stcharleswealth.com. And last but not least, Mr. Meatball, I did check this Friday is the first, so we do have non-farms this Friday. So that should be intriguing. And then where should folks go if they want to get more of the pit, sir?
Yeah, we're putting out great content every single week, every single day. Come and check us out, optionpit.com.
There you go, optionpit.com, the place to go. We got to get on out of here. Back again in a little bit for the Crypto Rundown, listeners. I'll be joined by my guest, Willis Croft from Wintermute. So that should be fascinating stuff as we roll out the crypto hot seat there, breaking down all the action. There's a lot of it in the world of crypto. Even those of you folks who are maybe crypto curious, I know once Bitcoin makes it over 30K, all of a sudden you folks start to pay attention. Your antennae perk up. So stay tuned for that. Of course, if you're hanging out in the live, stay tuned. We'll be back in a little bit. If you're listening on demand, as I know many of you are, I'll be hitting the network later today. If you want to join the live, you want to join the pro, you want to come back for our pro Q&As later this week, as well as, of course, options oddities. Maybe we'll get into some Vodafone fun. You don't know. Only one place to go, theoptionsinsider.com/pro. Also going to have Visor's Option coming up tomorrow, so that should be a fun one. Wednesday, of course, Education Wednesday, back again with Options Bootcamp. Then we're back again on Thursday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Tasty Trade. You take the unbeaten path. You root for the away team. You wear shorts in winter. You don't put ketchup on a hot dog. So why wouldn't you trade with a broker that lets you go your own way? Tasty Trade. Stocks, options, futures, and more. You choose. You trade. Chart moves with hundreds of custom indicators. Stare at the candles till you see them in your sleep. See it, click it, trade it on mobile, web, or desktop. Supported by a trade desk that knows how traders think. The data, the tools, the knowledge. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.